Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live. Well, these are the top headlines that we're tracking at this hour. It's a lackluster day of trade for the markets. The Nifty hovers around the 10,600 mark. Pharma is the top sectoral gainer, while metal stocks extend losses. Hindalco is the top loser on Nifty, falling the most since November 2016, following a global sell-off in aluminium prices. Yes Bank gains the most in a month and is the top gainer on Nifty, ahead of its fourth quarter numbers on Thursday. And Bharti Airtel is set to report its fourth quarter earnings later today. The telecom major may post its first loss in 5 years.
Well, those are the headlines at this hour on Countdown. Thanks for tuning in. My name is Neeraj Shah. Some numbers on your screen before we actually get to what the indices are doing. 2 or 3 charts should be pulled up on the screen. There is Network 18, which has come out with numbers, yes. I think 2 disappointments are Reliance Naval as well as Coromandel International. And the intradays of both of these charts will show you what's happened. That's Network 18, which has come off after the numbers that have come out. Reliance Home Finance, Reliance Naval down 15%. I think Reliance Home Finance, 2, sharp crack because of its numbers. And then Coromandel International, it came out with its numbers, misses on the top line and the bottom line compared to estimates, and there's a sharp gash that has happened in Coromandel as well, 479. So a bit of a disappointment that has come into the current quarter for Coromandel. So there are 2 or 3 numbers that have come out, haven't quite stood up well, but the markets are doing fairly well for themselves, about 0.5% higher for the Sensex, the Nifty Bank about 1/3%, so not bad going. And the heat map will show you that there is fair bit of green in the banking space. Selective private banking names are doing well. Yes Bank, I think, was doing very well, about 3.5% higher. ICICI Bank 1.5%. Bajaj Finance and HDFC. So it's NBFCs and financials which are leading the charge. And the big boy Reliance Industries is the top contributor in terms of the gainers. In the sense of the losers, Hindalco, which was down about 2.5% yesterday, another 10%. It's stayed this way. It's just not recovered even an iota from the levels that it was at. And stocks like Vedanta and some of the IT names have corrected a bit in the session today. In terms of what's trending today, I know banks and commodities would be either direction of the large cap universe, but the mid cap universe has stocks like Indiabulls Ventures, Alkem Labs and GMR Brew Infrastructure, those 2 or 3 names which have done rather well for themselves. There are, of course, stocks which are losing. I don't think Coromandel would feature right up there now, but Nalco, TV18, Balkrishna, all of these feature. Nalco, obviously, in light of what's happening to Hindalco and Vedanta, Nalco too would come off. A quick peek into the small cap space would suggest that there are stocks like Gati, which on talk of this new partners coming in, is up about 20-odd%. Astra Microwave and Shankara Building Products is the third one, which is up about 7-odd%. And some losers, I would guess Vakrangi, okay, no, not out there, but Reliance Defense, Suven Life and Quality are amongst the stocks which continue to grind lower. What about the liquid universe though, Navneet? That's the question.
Well, we're above the 10,600 mark, Neeraj, but it's been a range-bound session, so to say, both for Nifty as well as Bank Nifty. They've been flirting around with that levels of 10,600. For Bank Nifty, it's been 25,000. As we speak, Bank Nifty is right now trading with gains of nearly 82 points. And the most important data metric, I guess, for today's session should be the India Volatility Index. The way it's fallen in today's trade, one would have imagined that markets would have gone even higher, but that's not the case. India VIX has fallen below that key mark of 12.5. Remember, that's the level which most of the derivatives analysts keenly watch out for, and it's after a lot of trading sessions that we're seeing a significant fall coming in for India Volatility Index. Well, this is the expiry week. What sort of range that one can expect going into the expiry day on Thursday? If you look at the options data so far, the 10,600 and the 10,650 call strikes have been pretty active in trade. The 10,600 strike has added nearly 3 lakh shares, and the 10,652 has added almost 3.2 lakh shares as we speak. Look at the 10,600, the 10,300, 400, 500. All these 3 put strikes in today's session have seen some bit of unwinding, telling you probably ahead of the expiry, some put writers could be booking their profits. But look at the premium on the 10,600 call as well as the 10,600 put strike. If you go by the premium on both these strikes, it's giving you a range of somewhere between 10,550 as well as the 10,630. Remember, that's the resistance mark which most of the technical analysts too have been talking about. Let's see if the markets consolidate around these levels or not. Well, in terms of stock futures, Max Financial is the one which has been having a good run. It's up for the 6th trade session today. It's trading with gains of nearly 4% as we speak. In fact, if you look at the trading pattern in the last 6 trading days, it's gone up on high volumes. Well, these are the April futures. If you could just pull up the rollover plate, that's going to show you a real picture as to what sort of addition has been seen for the May futures of Max Financial as well. So there you go. May open interest is up nearly 70% as we speak. The other one which has been active is Wockhardt. If you look at this counter, it's almost up 10% in the last 7 trading sessions. Though it's off day's high, it was trading somewhere with gains of 4.5 to 5%. So it's come off day's high, but the volumes definitely have been on the higher side today. The April futures as we speak are trading also with a premium, plus the open interest has gone up higher, telling you at these levels some bit of long positions have been taken, and the rollover for Wockhardt stands at about 32%.
Okay, let's now get a market voice. Prasun Gajri, Chief Investment Officer at HDFC Life, joins us right now on the show. Prasun, good having you. Thanks much for taking the time out and speaking with us at Bloomberg Quint. Prasun, okay, what's your thought on how do the next 6 to 9 to 12 odd months shape up? We've kick-started the earnings season in good earnestness. Most positive, most corporate commentary, at least the ones that we've spoken to, seem to be optimistic about how FY19 will shape up. How are you feeling about investing right now?
So our belief also is the fact that there is definitely a certain level of optimism which is creeping in as far as the economy is concerned. There is some turnaround in growth which I believe is happening. It's a cyclical turnaround maybe, but there is a certain turnaround, and therefore we do believe that the corporate earning growth should be reasonable this year, at least in mid-teens if not higher, and that augurs well for the market. Having said that, while the micro looks good, where the earnings are looking good, it is the macro where the concerns lie at this point of time, unlike the last 3 years. So we have some deterioration happening on the current account deficit, some deterioration on the fiscal situation, interest rates have started trending up. And globally also we have started to see interest rates trending upwards. On top of that, you have a political calendar which will make the markets volatile. So I think that is the reason markets in this year we believe will continue to be volatile. But purely from a fundamental and earnings-driven perspective, we do believe the markets are looking reasonably good from a 12 to 18-month perspective. However, in the interim, there could be large amounts of volatility, and our belief is that if the market corrects, that will be even better time to buy, because eventually what matters for the market is not necessarily the macro, but the underlying earnings. And if we see that turnaround continuing over the next few quarters, I don't see any reason to worry about the market. Yes, there will be short-term issues. Yes, crude is moving up closer to $75. Interest rates in US have also touching close to 3%. Rates in India have moved up. There are worries all around on some of these macro parameters. So that could cause volatility, but frankly, one has to overlook these short-term things, and I believe as long as the earning turnaround continues, it's a positive environment.
Prasun, you highlighted about crude touching those levels of 75. Just talking about the macro picture as well, do you see that threat of twin deficit emerging back, which has been a concern for the macro picture for last few years, considering now that the crude oil prices have been inching higher, and we speak to a lot of analysts now, the number which is coming up, it could also touch the mark of $80 per barrel. And obviously the bond yields in India have also been inching higher.
Look, I don't want to kind of hazard a guess as to where crude levels are likely to be, whether they're going to be $80 or whether they're going to be $60. I have absolutely no reason to comment on that. Obviously, if crude remains at these levels or goes higher, it has a bearing directly on our current account deficit and indirectly on the fiscal deficit, because there is a possibility then that the government does not necessarily pass through the price to the consumer, and therefore it adds to the fiscal deficit. Having said that, it's very difficult to conjecture sitting here today how these things will pan out over the next 6 months. Yes, if crude remains at these levels, there is a challenge which is clearly emerging on both CAD and the FISC. However, having said that, on the FISC, I do believe that the GST collections could surprise on the positive side as the e-way bill adoption comes through in a meaningful manner. The early numbers for March are looking reasonably good compared to what we have seen in the past, and this is prior to the e-way bill introduction. So I do believe if the GST numbers stack out well, the fisc pressure may not be that high. Yes, but one will have to still wait and watch for how much the MSP increases as we go along during the year, and how the government really plays the fiscal card before the elections are announced. So I think those remain a little bit of a challenge in terms of understanding. But yes, as I said earlier as well, macro at the margin is clearly a level of concern. Having said that, if crude comes back to $60–65, all these troubles will be forgotten. So I think the bigger variable to watch for us is as you rightly said, is crude.
What about yields, Prasun? Again, let's not hazard a guess, but looking at the yields the way they are right now, and without any assumptions of where they would be, what does this do? One, to borrowing costs for corporates. Two, to NBFCs by and large. I think post the RBI measures and the yield softening all the way to 7.15 odd around the policy, there has been a sharp vertical uptick in the yields as well. And the fact that the US 10-year is close to 3 is not helping matters either.
Agree. However, having said that, I do believe that there is a lot of technical reasons why the yields have moved up more than they ought to. So I do believe there could be some easing of the yields. Obviously, not as much as we believed earlier, because the Monetary Policy Committee minutes are definitely turned out to be far more hawkish than the initial RBI policy suggested. So yes, there is a cause for concern, but I still would like to believe that RBI is unlikely to raise rates before the end of the year. So in that case, I do believe the yields are a little bit exaggerated at this point of time, and we could see a little bit of easing off. Having said that, there is unlikely to be a large and steep fall in yields, and therefore there is a possibility that the borrowing cost for corporates goes up at the margin. At the same time, when the commodity prices are going up, that doesn't augur very well for the margins. But I do believe as the economy recovers and the growth recovers, there will be some pricing power in the system to be able to absorb that. So very early to say whether how much impact this will have on earnings. One will have to really wait and watch. As far as NBFCs are concerned, I guess one has to distinguish between NBFCs. There will be NBFCs, depending on the line of business, who will be able to preserve the margins in a rising interest rate environment as well, because they are in the right lines and they have ability both to control their cost as well as pass on some of the pricing. At the same time, there will be NBFCs who will not be able to do that. Therefore, one will have to distinguish between these two kind of NBFCs and not paint everything with the same brush. However, in a rising interest rate environment, there will always going to be a little bit of a challenge and time lag before they are able to pass on this. So yes, that would remain a little bit of a concern.
Okay, so numbers on your screen as well. Prasun, just a moment out there. ICICI approved Q4 numbers. Consolidated net profit down a bit. Net premium income has gone up, but I think the numbers just shy of what the street was hoping to see, and which is why a bit of a pullback in what's happened to ICICI approved stock price today. But these guys anyways remain a long-term story, and therefore don't really look at necessarily only the quarter-on-quarter performance. Just look at the long-term that some of these schemes or some of these businesses have on offer for you as an investor. 382 though, about 1.5% higher. Prasun, I'm guessing you can't really answer or talk about the insurance companies, so I'll skip that question. But where is it that you are believing, or which pockets do you believe could do well over the course of the next 12 months based on earnings recovery? Because everybody's talking about that earnings recovery. We've seen the first signs of that in the first 24 months of, or first 24 days of April. But over the 12-month or an 18-month period, where do you think the highest beta for earnings would come in?
So my sense is it will be more driven by discretionary consumption in the country. I think that is holding on well, and I also believe that the financial sector, while it's very difficult to really determine the exact contours given the fact that we don't really know what is coming in this quarter and a lot of uncertainties around how the regulations from RBI will really pan out for these banks. I do believe that the worst is largely going to be behind, and therefore we'll see some recovery for the financial sector, especially for the corporate banks. I think so in discretionary, within discretionary, I do believe something like automobiles will continue to deliver very good earnings. I do sense, given the fact that we are starting to see good volume growth on metals as well as cement, given the infrastructure drive, some of the cap good stock and cement stocks. We could see some pricing recovery for cement as we go along, and therefore the earnings from that should come through because the volume growth has already started manifesting itself. So largely we are focusing on domestic consumption and domestic infra themes. On top of that, one will have to watch out for rupee. If rupee continues to be weak, then some of the export driven sectors could be the drivers. But if rupee does not continue on the same lines as we have seen over the last few months, in that case we would seriously want to avoid some of these export driven sectors and continue to focus on the domestic side.
Okay, Prasun, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. Well, talking about the markets, Nifty is now firmly trading above the mark of 10,600. 25,053 is the mark where Bank Nifty is currently trading. Remember, the sugar pack has been in focus because of that news that the government is considering imposition of sugar cess and also reducing GST on ethanol, and that's the reason why most of these companies in the opening session saw a positive tick coming about. Let's get some more clarity on this. Joining us now is the Executive Chairman at Sakthi Sugars, Mr. M. Manikam, who's there with us. Hi, Mr. Manikam. Good afternoon. Thanks a lot for joining us. Could you confirm that news for us? I think there is a lot of dues which is still there towards the farmers by the mill owners. I think the number which is being quoted is somewhere between 19,000 crore. And in order to clear that figure now, the government is taking a lot of measure to introduce some cess, and also they're looking to reduce GST on ethanol.
Yeah, but I don't understand how the cess is going to help, because cess is going to take the money away from the market and the government is going to give it back. So that may not really help us, because once the cess comes in, the market price will go down. So we don't see an impact of the cess really helping the industry, unless the government actually subsidizes from the budget.
Okay, but Mr. Manikam, could you confirm the figure? What is the current dues which is still there towards the farmers? Is it 19,000 crore?
I can't confirm, because most of it is in UP and Maharashtra.
Okay.
So we have no idea how much it is, because Tamil Nadu doesn't have much really.
Mr. Manikam, good afternoon. Neeraj here. You know, what to your mind stops this downward spiral in sugar prices? Every day the message that I get from the dealers seem to suggest that it's another $50 shaved off from what it used to be, from 3,200 or thereabouts. Now I think 2,550 to 2,600 odd. What stems this this fall, to your mind?
I mean, I think excess production. Basically, the problem is there's a lot of excess production, and the millers are being forced to settle the cane price. So they have to sell off the sugar, and the market knows there's a lot of sugar. So there's no buyer because of excess sugar in the market.
So are you saying then that the resolution is not really got to do anything with the sugar prices, but some bit of a support that the government needs to give to the industry? Because boy, the industry would be bleeding right now.
Yeah, we are bleeding, and actually the reason is because the government is fixing the cane prices. Actually, the root of the problem is that the cane prices should be realistic. You know, we should go with the Rangarajan formula. Today, even the FRP is higher than the Rangarajan formula. At today's sugar prices, we should be paying the farmer only about 2,000 rupees. But I think the UP millers are paying about 3,200, and the Tamil Nadu mills are paying roughly about 2,500. So we are far away from the reality of realization. That's the problem that we have.
But with an assumption, Mr. Manikam, that closer to 9 months or 10 months from the elections, this might be a bit difficult pill to execute, however necessary it may be. Do you believe that the move that was suggested, I know you mentioned that it will not have too much of an impact, the cess, but if a cane subsidy of some sorts comes into play, because I heard that term as well, does that alleviate the problem a bit?
Not really. I mean, the cane subsidy is going to come from the cess, which is going to depress the sugar prices. So we'll only go into a spiral. So I'm not sure if, maybe if the government is going to pre-fund it and collect the cess over a period of time and compensate themselves, that might happen. But we'll have to see how the exact scheme works.
Okay. Mr. Manikam, tough times. I hope the industry, which has seen quite a bit of tough times in the past as well and gone through it, comes out well enough. Thank you so much, though, for taking the time out and being so candid with us.
Thank you.
That's the executive chairman of Sakthi Sugars, M. Manikam. Clearly, a lot of stress on the sugar space, and not surprised that that would be the case. The sugar prices have just gone down, and one way, and that is down. It's 600 points shaved off, 650 rupees odd shaved off from the levels that they were there earlier.
As he mentioned, I think the primary reason for that is the production has been, I think, the highest that one has seen this year, and hence that's the reason. Because of higher production, we are seeing the sugar prices falling, and therefore the stock prices also of majority of these sugar companies have been on the downward spiral, as Neeraj was mentioning. Something like Balrampur Chini, which is also there in the futures and options market, had seen a lot of short positions building up, in fact, in the last 4 to 5 weeks. And imagine Balrampur Chini, which used to trade somewhere about 110, has slipped to levels of nearly 68 or somewhere thereabouts. But let's shift focus from sugar to pharma pack and put spotlight on Alkem Laboratories, the stock that's gaining for the second straight session today. And analysts covering the stock are also bullish on its prospects going ahead. And Neeraj is going to tell us why.
Well, I'm guessing that today's move, or maybe the last today's move, has to be attributable to a note that came in. I could see no other reason, but for the fact that pharma as a space has come back in the reckoning of sorts. So the last few days, we've seen a bunch of pharma stocks get these buy calls from fund houses and from technical traders. And Alkem, I think the news bit is that Alkem Lab was upgraded to a buy at Nomura. They come off the target price ever so marginally, but at 2089, it's still a target price that is to be reckoned with. So if the camera could have shifted in a bit closer, you'd have seen that the reason for Alkem Labs doing what they're doing is because it's been upgraded to a buy at Nomura, this line on the screen. Now, as a result of that, what's happened, the volumes have gone up. It's not a stock really that trades at substantial premium valuations. A company that has got a larger domestic focus, so doesn't get duly impacted if the US FDA is a lot more strict. That works. It's not trading at a premium to averages. Not a single sell call, all buy calls, and the 12-month target price too is, I think, leaving some room of an upside for this stock. Now, this is the return potential for Alkem Labs. The 12-month target price is 2323, and therefore return potential is about 20% on a domestic focused pharma company. For a return potential of 20%, most brokerages liking it. The numbers haven't been too bad. You want an exposure to pharma within India, it's probably a safer bet to take. I don't know about the quantum of returns that come in this versus some of the others. That's a call that some of the experts will give you, because a lot of people are now saying buy into the beaten down pharma names and not necessarily these. But we're clearly seeing buying coming into these stocks as well. And as I was saying, almost every single analyst on the screen, on the street, has a buy call here on Alkem Labs. So good going really 2 days in a row in today's session as well, Navneet.
Well, that's about Alkem Laboratories. The pharma pack, in fact, has been doing pretty well. Let's just pull up the Nifty Pharma Index. You also had stocks like Biocon at the start of the show in the futures and options segment. I highlighted something like Wockhardt too, which has been going up in the last few sessions. But the Nifty Pharma Index looks like has come off day's high, and Biocon is trading with gains of 3%. Well, before we move ahead, I just want to pull up the stock price of Gati. Just want to alert our viewers that it's now locked in upper circuit. Remember, there was a news this morning suggesting that there's a board meeting day after tomorrow where the company was looking to induct a new strategic partner, and on back of that the stock's been doing pretty well. Not only Gati, actually, I don't know, there was a rub-off effect seen for the entire logistics space. So you pull up stocks like Snowman Logistics, something like Patel Integrated, VRL, Sickle, all of them actually have seen substantial gains. As we speak, Snowman Logistics is also seeing gains of 17%, and VR is trading with gains of nearly 4%. Let's move on and talk about the global picture as well. US 10-year yields stopped just short of 3% in trade on Monday, the highest in the past 4 years. The dollar too climbed to a 3-month high as investors prepare for a higher rate regime. Well, this could have implications for global equities too. JP Morgan and Macquarie expect rising yields to cause pain for stocks. Well, as they now seem to be expensive. Meanwhile, in the commodities space, crude oil climbs to a 3-year high, but UBS isn't worried as they expect a 10% slide in crude over the next year. Listen in to what top brokerages had to say on global markets, be it equity, fixed income or commodities.
thing that everyone's trying to grapple with is if it does go through 3%, how quickly may it ascend to 3.5%, say, or 4%? For us, it's a little bit different to that. It's the reasons why we're seeing that 3-year yield move. It's about better growth outlook, a little bit more inflation, and the faster rate hikes being priced in by the market. You know, you're seeing the 2-year and the 5-year move as well. So on the back of that, you're actually seeing a growth outlook that's very well, and we're seeing that reflect in the earnings season that's coming through in the US. And so, yes, those higher yields should feed through into higher borrowing costs and perhaps create some pain for equity markets eventually, but we're not at that point yet. And I think it should be reaffirming the fact that we do see a global economy that's looking relatively healthy.
If we reach WTI levels as where we are now, the shale producers would come back, and in fact we are seeing them coming back. Also, if you look at how the market is positioned, specs position certainly more on the long side could also be a bit of a squeeze. So yes, I guess we need some clarity about the Iran and the sanctions in particular, maybe Venezuela as well. But nonetheless, I mean, we are no longer in this undersupplied situation that we found a couple of months ago. So we still think that maybe if you go on a 12-month horizon, maybe year-end, we have about 10% downside on oil.
The key level, to be precise, would be 3.05%. That was where 10-year yields were on the 2nd of January 2014. That was the peak of 10-year yields after taper tantrums which started in September 2013. So if that 3.05 were to break, then I think the next level to watch out for would be 3.25. And at that point, I do believe that there will be some adjustments in positions, bonds as well as FX. Now, even as bonds were to sort of cheapen when yields were to break 3.05, then in relative terms, equities would look expensive as well. So there will be some market volatility for sure. And I think in the wake of all that volatility, dollar could strengthen.
Well, that's the view from a bunch of global experts on global issues surrounding the markets. As we speak, though, there don't seem to be too many issues bothering our markets. We're up about 0.5% for the Sensex, about 1/3% for the Nifty. The Sensex is a lot better, it's performing much better than the Nifty too, and the Nifty Bank about 0.5% higher. So that seems to be doing okay for itself. Just pull up the market breadth and let's see if the advanced decline ratio has seen an impact in the last 1 hour compared to what it was doing for most part of the trading day today. No, in fact, the number of declines have expanded compared to the advances. Anyways, let's get started on the conversation. Before we get in our technical experts, just an initial thought from Mr. T.S. Harihar. He's Chief Executive and Founder of HRBV Client Solutions, joins us right now on the show. Hari, good having you. Thanks so much for taking the time out. A bit of a surge in the markets the last 15, 20 odd sessions from those sub 10,000 odd levels. The last 1 month has been, or April, has been reasonably good. Have you put more money to work, and have any of the earnings in the last 8 odd sessions surprised you positively and made you want to deploy more money into those businesses?
See, if you actually take out the technology impact, that is TCS, Infosys, Wipro and HCL Tech, I think the rally may not have been so impressive in the first place, because the rally has been largely driven by technology. And I think technology seems to be a mix of a weak rupee and a slightly, I would say, positive outlook as far as TCS is concerned. So these two things have probably held the market. Honestly, I am worried at these levels, and worried for a variety of reasons. Number one, I think the way bond yields are going up, and the US is getting close to 3. Now, 3 is normally a big concern area for the US. Now, the US is getting close to 3, which is where it was in Jan 2014. Indian yields are back after the credit policy from 7.1% to 7.75%. So in these kind of circumstances, I think Nifty rallying about 600 points to me looks to be unreal. So I would believe that the risks seem to be favored more than the kind of returns at these levels. And I would believe that at these levels, at least a long is a fairly unfavorable risk return trade-off.
Okay, so from a trade perspective, going long is not too favorable. We'll ask Hari about what about things on the investment side as well. But before that, it's 2:30, so let's get in our technical experts and try and figure out how are they viewing trade per se, just pure trade. Ruchit Jain, technical analyst at Angel Broking, joins us on the show, as also Sacchitanand Uttekar, Assistant Vice President for Technicals at Tradebulls. Gentlemen, both of you, good afternoon. Thank you so much for taking the time out. Ruchit, I'll come to you first. 0.64%, almost 200 points for the Sensex. From a near-term basis, either a BTST or STBT, whatever, or until this expiry, what's a call that you are giving to your clients on the indices?
Yeah, hi, good afternoon, Neeraj. Well, Neeraj, if we see since last few trading sessions, 10,500 put option has attracted a very high open interest. And even yesterday we spoke about it, that how the put writing has shifted higher during the series from 10,300 to 10,500. Now, if we see individual stocks, then some of the heavyweights today have been participating with, have been trading with a positive bias. Say names such as Reliance Industries, even Bharti Airtel, we are expecting a positive momentum. So till this heavy index, heavyweights are showing positive move. I believe that the expiry should be on the positive side. And 10,640 would now be very crucial level to watch out technically, as in February month index made attempt twice to cross the 10,640 level. In case we see a breakout about 10,640 maybe today or tomorrow's trading session, then I think we could see an attempt for index to go head higher towards 10,700 kind of levels. But as I said earlier also, that 10,640 and then 10,710, these are good levels for positional traders to start booking profits on long positions, which they have created a month earlier. I think these would be the two key levels to watch out on the higher side, and 10,550 from this expiry perspective, next 2 days perspective, would be a key support for Nifty index.
Okay, so that's the level to be watched out till Thursday, 10,550 to about 10,700 on the upside. Sacchitanand, what about you? Would you take any position at current levels? We've seen some bit of pullback in the last half an hour of trade.
Well, good afternoon. We have been on the bullish side of the market, and though the market has been losing momentum, but if you look at the trend itself, the trend has been intact on the long side. So we are expecting that the market should see the levels close to around 10,700, 10,705, which is the 61.8 retracement of its previous leg of the fall. So I think every decline should be utilized to create long positions. 10,490 remains a critical support for this market. Unless we don't see a closing below that, we don't see the ongoing trend getting terminated. So definitely, it's a buyer's market. One should stay intact with the long positions. 10,700 would be the next juncture.
Okay, so Sacchitanand is advising to buy Nifty at these levels, and he has a target price of 10,705. Richard, what about the individual stocks in trade? What are you recommending?
Yeah, so if we see advanced decline ratio is almost 1:1, so one needs to be very stock specific in this leg of up move. We have a buy recommendation on Yes Bank. After a consolidation phase of last few trading sessions, the stock has given a breakout today morning, that too which is supported by very good volumes. So I think just from a 2 to 3 days perspective, this call would be maybe till expiry itself, we should see some positive momentum. One can buy with stop loss below 314. The targets, although are not very aggressive, since it is a recommendation for just a couple of trading sessions, we are expecting levels around 337 on the higher side in next 1 or 2 trading sessions. In mid-cap segment, Himadri Specialty Chemicals is another stock that we have been recommending to go long on in today's trading session. We have seen that last 3 or 4 weeks, the prices have consolidated above its 200-day moving average, and after a gap up opening today, the volumes have started coming in. So there is a higher probability of the resumption of the high degree uptrend. For short term, one can buy with stop loss below 146 for target around 170.
Okay, interesting. By the way, just stocks that are trading at new highs include a KDDL, Kamla Dials, erstwhile Kamla Dials. I think they own the Ethos chain of watches, and things related to retail have generally had a good move. There is KDDL, which is up. There is Zensar Tech, which is reacting very well, 7.5% higher. Biocon has a 3.5% uptick as well, so good going for that stock. And Punjab Chemicals, 12.5% higher, trading at new highs for itself. Hari, you spoke about largely it being a TCS-driven rally. What about the other IT names? I mean, all of them came out with a fairly decent set of numbers, at least the ones that we've seen till now, save for maybe Sasken, which the street rewarded because the bottom line numbers were impressive, just that the revenue numbers looked a bit muted. What have you made of the non-TCS, non-Infosys, mid-size pockets of within the IT space?
See, interestingly, most of the mid-cap IT companies have seen an improvement in margins. If you look at it across the board, top-line growth, I think, has been muted, and we all understand the reasons for that. But I think most of the mid-cap names are seeing an improvement in margins. If you look at a Polaris, a Hexaware, a Sasken, most of them are seeing an improvement in margins. I think that's probably holding the investor interest as far as the mid-cap stocks is concerned. But, again, as I keep saying, a lot of this is predicating on a weak rupee. And the rupee is already weakened from about 65 to close to about 66.5. And, we know that already there's a pressure from the US about not letting the rupee weaken too much, because Donald Trump has already warned India not to let the rupee weaken and, hurt the dollar. So I don't think the rupee is going to weaken much further. So what is left for these IT companies? I don't know, that is a big question. Yes, margins have been good for mid caps. I think the rupee has been favorable for large caps, but the whole story apparently appears to have played out as of now.
Okay, before we get in Sacchitanand's ideas, Hari, there's one more question. Do you track Coromandel International? The numbers came out. They missed, I think, top line by about 10, 12%, bottom line by maybe 15, 20%. The reaction has been very, very severe on this one, 12% down at 465.
I think that could largely because the stock has also rallied quite a bit.
Sure.
If you look at the last 1.5 to 2 years, I think the stock has had a phenomenal rally. So probably I think from that perspective, it could be a disappointment. But this is actually a stock we have liked. It's actually more of a holding company than being a specific industry. But large interest in fertilizers, sugar, quite a few diverse pack. And we have liked them. If you look at a lot of these holding companies are doing pretty well. If you look at the Bajaj holdings, if you look at the Chola holdings, a lot of these holding companies have been doing quite well. So we like this stock. I think the missing estimates could be more because of, I would believe, very, very specific reasons.
They posted single-digit margins.
As I said, industrial cycles, it's more of cycles that have been responsible. But we actually like this stock at these levels.
You like it at these levels?
We like it.
What's the kind of earnings growth that you pencil in for this one?
See, it used to grow at, I think, about 10 to 11%. Now I think it's this quarter apparently it has been slightly down. So we believe that it should get back to the old levels of growth.
Interesting, 14% down. Sacchitanand, a chart check on Coromandel if you track it, and of course your stock-specific recommendations for the afternoon.
Well, Coromandel, yes, we do track it. It is more on the investment side rather than the trading side. But if you look at the cut that we have seen, I think 460, 465 is where it is quoting right now. I see that the stock may stabilize here. We are not expecting a further decline in the counter. Overall, the trend for this particular stock has been phenomenally good, and the way it has reacted to its results, I think this is a base where we may see the stock again stabilizing. So I think from a long-term perspective, I think this particular decline looks like a very good opportunity. One should look out for buying into this particular counter rather than exiting it. So when you look at some of the stock recommendations for tomorrow's trading session, we are liking Engineers India now. So if you look at the overall structure, 150-55 has been a very strong base for this particular counter for last almost around 2 years. And we are seeing a Harami cross getting formed near to this particular base. So we are expecting that the stock may again see a revival back to its 200-day exponential moving average, which is placed around 165. And that's why we are recommending a long position here with a stop loss of 151.30 and an immediate target of around 165. The second idea that we are liking is Bajaj Finserv. So if you look at the overall formation, we have a wedge getting formed on the weekly scale. This particular pattern now looks mature, and we are expecting that this particular move can extend right up to 59.60 going forward. But from an immediate perspective, 5740 is the target that we are recommending. The stop loss for the trade can be placed around 5330, and long positions can be initiated right now.
Okay, so those are a couple of the top trading strategies which have come by from Sacchitanand. Just want to pull up ICICI Prudential. Remember, the numbers had just come in a while back, and that time the reaction was not too much, or rather it was on the downside. But there's been a sharp pull back from those lower levels for ICICI Prudential, which is now trading at day's high at 3.5%. Mr. Harihar, view on ICICI Prudential?
See, a very interesting statistics I'll share with you. When the full year insurance numbers came out, when you put out by IRDA, I think LIC has actually lost market share. And the market share growth has largely come from the private insurance companies, largely ICICI, SBI and HDFC, the big three. So I think definitely there has been some amount of sentimental negative for LIC, largely because of them starting to fund railways, them starting to become a kind of a dumping ground for all the PSUs that don't get subscribed. So there has apparently been some kind of a negative view, and I think the private insurance companies are benefiting from it. If you look at the numbers, numbers are not very impressive, but definitely I think there has been some kind of an improvement as far as top line is concerned. So that's probably holding in favor of ICICI Prudential. And I think over the next probably few quarters, you should see all these private insurers actually gaining in the cost of LIC.
Do valuations also favor ICICI Prudential over, say, an HDFC Life?
See, ICICI, like the bank, has traditionally quoted at a discount to HDFC and to SBI Life, and that is, I think, more for historical reasons. That could probably be one of the reasons why I think Pru could actually start moving up a little more from here. But I would believe that as long as the parent company overhang remains about whatever is going on right now in terms of conflict of interest, I would believe that the valuation gap will continue as far as ICICI and the other banks, other insurers are concerned.
So if you were to buy, I'm not saying you are, but if you were to buy one of the three, which is HDFC, SBI or ICICI, looking at everything, the overhang, the performance and the valuations, where would you park your money?
I think without a doubt I would go for SBI Life.
SBI Life.
Tremendous growth. I think one of the best margins in the industry. They'll really get the benefit. And see, ultimately insurance is growing largely to the bank assurance model. And if you're looking at the bank assurance model, there is nobody better than SBI to capitalize the bank assurance model. So I would undoubtedly go for SBI Life at these prices.
When SBI Life is trading at days high, let's just pull up HDFC as well and see what that one is doing, because there's been a sharp reversal in the stock prices of these companies. HDFC Life, okay, just about trading flattish, but the profitability definitely took a beating for ICICI Prudential in the fourth quarter, which is down 17%. Some bit of uptick was definitely seen for the net premium income. Well, as some of the other earnings from the broader markets, which have done pretty well, the stock markets have given a good reaction to the earnings. Mr. Harihar, stocks being India Bulls Ventures, look at GNFC, or for that matter, even Delta Corp, all of them have posted good set of numbers, and we've seen good gains also coming by. Do you see any value in these counters at current levels now?
Delta I don't track honestly, because I always keep joking that stock market is a punt and Delta is a punt on a punt, so it's a slightly more difficult game to predict. But India Bulls Ventures, yes, we've always been positive on the stock. My only worry is that in the last 3 days I was watching, the stock has gone from about 270 to 420. So I'm not sure what is the kind of margin of safety that you would have at these levels. But India Bulls, definitely it's a stock we have liked. Probably the price, it looks a little pricey at these levels, but I think the stock is something we do like. At lower levels, we'll definitely consider entering the stock once again.
Interesting. Now, I was looking at stocks which have moved up in the last 30-45 minutes of trade. Snowman Logistics certainly features out there. Some strong gains. It anyways was looking good, but has perked up even further in the last half an hour. And I think Godfrey Phillips has had a decent run too in the last few minutes of trade. Look at that sharp pullback. Some big gains that have come in. I don't know if the others, VSTs and the ITCs have done that, but Godfrey Phillips certainly has moved up. VST Industries would be another interesting one. I don't see it popping up on the screen. I think it's had at least Godfrey has certainly had one. No, not so much for a VST. Ruchit, come in on these two. One is Snowman Logistics. The other one is Godfrey Phillips.
Neeraj, if you see Snowman Logistics, the historical data suggests that around 47-48 the stock had a very strong support. Although this was breached for 2-3 trading sessions recently, but today's up move again has been supported by very high volumes. So I think this should show a positive momentum in near term, and there is a probability of this up move getting continued at least up to 60 levels in next 2 or 3 trading sessions itself. Would like to give a disclosure over here that I have recently bought the stock around 48-49 in my own portfolio as well. And from a short-term perspective, I have a positive view on this stock. Even in the cigarette segment, I think one should over Godfrey Phillips again prefer ITC itself. You've seen that in the recent past, ITC has been consolidating in a range, and the up moves have now started being supporting with very high volumes. So I think in this segment, I would rather buy ITC, prefer buying ITC at current levels. From a short-term perspective, 265 now is a very strong support base, and on the higher side, one can expect levels around 290 to 295 in near term.
Okay, that's the view coming in on cigarette makers. But among the nifty constituents now, your top gainer is Reliance Industries. That's also trading at days high. Remember, that's one of the heavyweights on the index, 4% higher, almost at days high. And that's the one, I guess, which has contributed the most to the gains that we've seen, which have come in last half an hour of trade. Because when we started the show, Nifty was trading below the mark of 10,600. There you go. That's the contributors chart. Reliance Industries single-handedly is contributing nearly 33 to 34 points towards the gains that we've seen on Nifty. Mr. Harihar, Reliance Industries, some people call it a telecom play now. That I don't know.
Yeah, of course, I think it is, at least the investments are going into telecom. The money is not coming in, but the investments are going into telecom.
Is that a good sign? or they should demerge the company and then it should be
they'll do it. I
telecom
think they'll do it at a later date. Probably they're not happy with the valuations now, but they'll do it at a later date. But I always thought there was a great risk that the company took, using all the oil money and putting into telecom. But the way the stock has gone in the last 1 year, I think it's been a very, very smart move. So at least that's what the market proves. Having said that, in my view, the movement of Reliance today seems to be a rush towards the $100 billion mark, because we had the TCS touching $100 billion yesterday, and I think today it looks to me more like a rush towards the $100 billion mark, not much else. But I also believe that in this quarter, when the telecom numbers start coming out specifically, Reliance would have substantially outperformed the other telecom now in terms of top line numbers. So I think that could actually, the price could actually be a kind of a foreshadow of what is going to happen in terms of telecom numbers this quarter.
Oh, interesting. Okay. Watch out for Reliance, 4% higher. It's a substantial up move that we're seeing in this one. You like the upstream oil space, Hari?
We do. In fact, what's happening is most of the oil companies, the upstream, there are only two upstream oil companies if you look at it technically. I'm not including Vedanta because Vedanta is only one part of upstream oil. They're typically quoting at prices that will be reflective of oil about $63, $64 a barrel, whereas the market price is now about $74 to $75. And whatever noises are coming from Saudi Arabia, it doesn't look like the oil prices should be coming down anytime soon. The second thing is, if you look at the oil subsidy, I think the oil subsidy is going to hit the downstream a lot more than the upstream. So we actually like Oil India. ONGC have got worries because it's a large company and the government is going to rely on ONGC to buy out the other downstream companies, create oil monoliths. That's not a very good news for a company like ONGC. But Oil India, I think, is relatively safer. It has less to worry in terms of subsidy burden. And I think its pricing is very, very reasonable. It's $60 a barrel, market price 74. So I believe that 235 Oil India looks to be a very attractive bet for me.
Let's say if the crude oil prices stay where they are or if they inch higher from these current levels, there are three options ahead of the government. Either they cut down on the excise duty or ask the OMCs to absorb some bit of losses there, or would the subsidy burden, which in earlier regime, companies like ONGC, Oil India and GAIL used to share the burden, which is now obviously the prices have been deregulated, so they no longer share that burden. If the government has to pick up one option out of these three, what according to you will they go for?
I would believe they'll do a mix. The government can't, cut excise to a large extent because they have already a 30 basis point spillage on fiscal deficit.
Right.
So they really can't afford to cut excise duties. There is a possibility of state levies being cut, but that I think depends on the states. The government doesn't have much control over it. I would believe that definitely some more subsidy burden is going to go into the books of the downstream oil companies, HPCL, BPCL, and rightly so because they have actually made hay when the prices were falling. HPCL and BPCL in terms of price are up about 10 or 12 times in the last 4 years. So they have made hay, and I think they probably will be asked to take some kind of a hit out of that. Upstream companies will take a hit, but a very small hit. The big hit will go to the downstream companies. But I think it will be a mix of all three strategies that the government will follow.
Well, I must mark a pocket of strength, and that's the alcohol and the liquor space. United Spirits is trading at the day's highs. Look at Radico Khaitan, it's surged a bit in the last half an hour of trade. Som Distilleries has surged in the last half an hour of trade as well. So there's a bit of a pullback that's coming into each of these names. Trading pullbacks they may be, but each of these stocks is doing rather well for itself. Sacchitanand, if I can ask you on the charts, United Spirits predominantly, but maybe some of the others too, the Radicos, the Soms, the Pioneer Distilleries of the world, anything that stands out for you?
No, I think definitely United Spirits is a better play. In fact, the way we have been looking at this particular counter, 3600 is something that we are expecting. It's a better candidate even on the BTHC front. So I think, the way it has just moved out of its 4 days of consolidation, we see this particular momentum getting continued. So on an immediate basis, we may see 3600, 3620 to be witnessed, maybe in tomorrow's session itself. But this particular rally may extend further right up to say 3700, 3780. So overall, the stance on this particular counter remains positive, and the trend has been phenomenal. We have just seen a breakout, and we may see this particular momentum getting continued, carried forward for at least a week or so.
Okay, that's about the alcohol makers. Clearly, United Spirits or be it Radico Khaitan have seen some bit of gains coming by in the last few minutes. United Spirits right now trading around those levels of 3,574. Well, let's move on to the chart of the day. With rising alumina and aluminum prices, NALCO has become an analyst favorite for the first time in 19 months. Why so, and what are the factors at play here? Let's ask Shraddha Babla, who has pulled up this analysis for our chart of the day segment today. Shraddha, over to you.
Well, his analysts are the most bullish on NALCO in 19 months, and most of that has come only in recent times in April. Now, according to Bloomberg, 61.5% of the analysts tracking NALCO have a buy rating on the stock, which is the green line that you're seeing here. About 15.4% have a hold rating, while 23.1% recommended a sell. That's the red bars. Now, the previous time that the aluminium player had seen such high buy ratings was only in September 2016, when about 66.7% of the analysts covering the stock had advised buying it. Now, shares of NALCO had rallied nearly 40% from its 2018 intraday low of 60.7 rupees on March 7 until yesterday. Now, today's stock price correction on the back of US softening its stance on Russell sanctions actually wipes out as much as 1/3 of all those gains. So how will the volatility and heightened uncertainty around global aluminium prices play out for NALCO? We'll have to wait and watch, but that's today's chart of the day.
Thanks a lot, Shraddha, for bringing those details. Well, talking about the aluminium makers, Mr. Harihar, it's been a volatile move, and we know the reason why. There's no domestic reason. It's how the prices have been moving on London Metal Exchange, so to say. What have you made of the sort of volatility that one has seen? And let's talk from a longer-term play here. Do you still feel commodities in the next 1 to 2 years will continue to outperform?
Over the next 2 to 3 years, yes. I think if you look at the commodity cycle over the last 50 years, typically commodities follow very long cycles. So the last bottom we formed was 2001 at the peak of the technology boom. And after that, it was up, then it was down, and I think now it's finally back to those 2001 levels. So logically, if you look at it, we should be starting off another up move from here, which should last about 8 or 10 years, and then a down move about 8 or 10 years. From that perspective, yes, I think medium term commodities will look great. Short term, I think there is too much of emphasis on what Trump says and what happens to Rusal, because Rusal happens to be the largest aluminium player outside of China. So I think there is too much emphasis on that. I understand yesterday, I think there was a softening of stance and aluminium prices fell by 9.5%. So I think it's a very difficult game to play. So I would believe short term it will be volatile, but long term, yes, I think the commodity cycle, especially the industrial metals, aluminium, zinc, copper, I think they are in for a very, very good move.
Okay, Hari, we'll leave it at that. Thank you so much for taking the time out and being with us.
Thank you.
Well, he believes Oil India is a good investment candidate. Keep that at the back of your mind. From the insurance space, SBI Life is something that he believes is a good bet. Before we slip into a break, let's take a look at all the key highlights for the day. From Sheshagri Rao to Pramod Gubbi, here out all the key voices who came on Bloomberg Quint Live in our special highlights package.
The objective of the IBC code is to maximize the value to the creditors. So there are some conflicting judgments which are coming in. So therefore the process may take a little longer than what we are all anticipating. That is a quick solution, resolution for all these accounts. The way the litigations are coming, and finally I think it will be resolved only in the Supreme Court by settling this law.
For next year, particularly, we are looking at the European market to give us the maximum growth. And we have large steam turbine orders that we have taken, which will be delivered to Western Europe next year. Additionally, we have the gas engine business, primarily from Western Europe once again. So these two sectors will provide us the maximum growth for us next year, this year rather. And the domestic market also is not that bad anymore. There is signs of some small recovery taking place. So we expect the domestic market to be better in this current year compared to last year.
we are currently doing about 40 crores of license fees between our 4 casinos in Goa, 38 odd crores. That, assuming that we continue to maintain all the 4 casinos intact, we will end up with a additional license fee of about 48 to 50 crores, which is on the gross level. Once you take the impact of the tax, because the expense increases, I'll have a tax positive impact, my tax outflow will reduce, so my net impact should be in the region of 32 crores. So effectively what we are saying is that of the land-based casinos, assuming a few shut down because of the license fee shakeout, the revenue that will be available to be captured from those casinos, we believe that should be good enough or large enough to compensate the hike in the license fee.
I don't think we're at the peak yet. I think there are more legs to this story. I mean, you have to take a view on where global growth is heading. I mean, nothing that that has been suggested in terms of data points over the last 3 months suggests that you know, global growth is peaking out. So perhaps we have another 12 to 18 months before we see that, and clearly commodities are directly on that you know, sustained or concerted rise in the global economy.
I still have a positive bias. It's just right now taking a breather. I believe any dip towards 13,600 on the index will be again a re-entry point where positionally the index can move towards 14,500, 15,000 gradually. If you see in the F&O space as well, Nifty IT has seen an open interest surge of almost 110%.
Right.
I don't recollect when it was last seen in the Nifty IT space. So definitely there is a lot of concentration which has been played in the option segment also.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. DQ Learning. Only on Bloomberg Quint.
Back with countdown, 29 minutes to go before the market shut shop, and we're doing rather well for our markets. The Sensex is the predominant gainer. It's up about 0.65% in trade. It's a really big move that we're having in the Sensex today. Not so much for the Nifty. The Nifty is actually had not the best of moves because Hindalco is down about 7.5% present only in the Nifty. Vedanta 2.5% present only in the Nifty. I suspect Tech Mahindra 2.5% present only in the Nifty. So these are the stocks which are dragging the Nifty lower a bit compared to the Sensex. So some losers out there which are present in the Nifty but not in the Sensex. Before we get in Fab 4. I think it's put in touch base with the management of Reliance Home Finance. Ravindra Sudhalkar, he's the Executive Director and CEO at the firm, joins us right now on the show to talk about the Q4 numbers. Good having you, Ravindra. Thanks so much for joining in. What's this tax saving that you had in the last year quarter, which isn't available this time? And you know that's kind of hit the bottom line growth. And you know what's also driven this sharp fall in other income for you as a company?
See, other income. Okay, let me start with this. See, overall, if you look at the affordable housing segment, you know, we see it growing at the rate of more than 30%, looking to the impetus that the central government has had on this sector. And we at Reliance Home Finance focus on affordable housing as a segment. So if you look at over the last 1 year, you know, we have grown, our total income has grown significantly by 46%. Our AUMs have grown by 47% to cross the 16,300 crore mark. Typically talking about last year, yes, if you look at the income was flattish because of the focus on affordable housing, which is why the fee income is flattish. Otherwise, quarter on quarter, we have surely grown.
Okay. Still, I mean, I'm sorry I didn't get it, but the tax saving number that you spoke about, which isn't available this time around, what was that?
Yes. See, if you're comparing the quarter profit after tax to the same quarter last year, YOY. Okay, so YOY, see, we had certain investments which were fully provided, which we wrote off, you know, last year, which is why we got some tax advantage. Which this year is not there. But I think what is correct, what would be correct is to look at the PBT number, which has grown at the rate of 96% over the same period last year. So as a company, I think it's important for us to compare the PBT versus this year versus the PBT last year, and it has shown a robust increase of 96%.
What you're suggesting, what was seen in the corresponding quarter, it was a one-off, and we no longer will see that even in the subsequent quarters, because PBT numbers definitely look good.
Yes.
Okay. My question on AUM, I think it's been a strong growth that you've given for FY18, and you also have a target till FY21 where you're looking at an AUM figure of nearly 50,000, for which you need to continue growing at this rate. Do you think that's sustainable? You'll be able to achieve that?
Yes, see, as I've said, the overall market is growing at a rate of 30%, and we at Reliance Home Finance have always grown at a rate which is much higher than the market growth rate. We would continue to build up on our strengths and continue to grow at the same rates. And we are surely confident, we are fairly confident that we'll achieve the targeted AUM of 50,000 crores by the year 2021.
You spoke about affordable housing. I think that's the segment where there's a lot of thrust from your company as well. But of late, we've also seen NPAs from that segment rising. Could you tell us how was the performance in Q4 in terms of NPA from that particular segment?
See, while our overall GNPA is at 0.8%, and it has fairly remained stable for 4 quarters now, looking to affordable housing finance, in fact, the overall GNPA in this segment is slightly lower than 0.8%. It would be about 0.65%. And I think at Reliance Home Finance, we are uniquely positioned because, you know, we clearly focus on category B and C cities with ticket sizes upwards of 7.5 lakhs. And in the periphery of category A cities for affordable housing with ticket sizes more than 10 lakhs. Now, most of the clients that we source have a CIBIL score, and at the same time, you know, they are not new to banking. So they already have some personal loan running somewhere or a business loan running somewhere and have a credit card. So we have a decent CIBIL score, and hence, if you look at it, the category in which we are focusing has not shown any stress at all.
It was the same last quarter as well.
Sorry?
It was the same last quarter as well. You haven't seen stress throughout the year.
Would you repeat the questions? Yes. Yeah, throughout the year it has been fairly stable.
Okay.
The GNPAs have been fairly stable.
One very quick question. Any fundraising plans in FY19? How much do you need to raise?
So currently, if you look at it, our capital adequacy is at 19.7%. So we are adequately capitalized. So this year, you know, in the near future, at least, you know, I don't see any fundraising plans.
Okay, Ravindra, wish you all the best. Thank you so much for taking the time out and speaking with us today, and all the best for FY19.
Thank you very much.
That's the management of Reliance Home Finance, sounding fairly optimistic about growth and the numbers ahead. That doesn't quite feature on the Fab4 list, I'm sure. So let's ask Yash Upadhyay, what does feature on the Fab4 list for the day? Good afternoon, Yash.
Good afternoon, Neeraj, and thanks for that. So first up, we have GNFC. Now, this one had gained nearly 11% today after announcing a strong set of fourth quarter numbers, and all-around good show. Their EBITDA rose more than 15 times on a year-on-year basis, while margins too came in significantly higher at nearly 27% for the March quarter. Alkem Labs had Nomura upgrading the rating on it. Now, they have upgraded the rating from neutral to a hold. However, they have cut down the target price to 2,098, which still indicates a further upside in excess of 10% from the current levels. Now, they are quite bullish about the company's domestic formulations business and expect free cash flows to increase as capex intensity reduces going forward. Gati is locked in an upper circuit of 20% after the company said that the board of directors will be meeting on April 26 to consider the proposal for the addition of a new strategic partner to augment their growth forward. A similar rub-off effect seen in the other logistics stocks as well. And finally, KP Energy is up about 4% today after the company said that it has won an order for the development of a wind power project in Gujarat. Now, with this, their overall order book stands to increase to as much as 600 megawatts and in absolute terms increases to over 650 crore rupees. Back to you.
Thanks a lot, Yash, for bringing those Fab4 stocks of the day. I'm just going to take GNFC forward, and also we have with us right here in the studio Avinash Gorakshakar, Head of Research at Joindre Capital, to take his view, because he had given this as one of his top calls in our previous, one of the previous shows, Avinash. If I look at the company, the EPS that they've done for FY18 is almost around 61. So it's trading somewhere about 9-10 times multiples. And I remember this point because last time you highlighted 2 points. The valuations are cheap and the finance cost for this company has been going lower, which was pretty much visible in the numbers itself. Yeah. If somebody would have bought, let's say, a month back, 2 months back, when you'd given the call on GNFC, what should be the target price? Would you still advise them to hold on to this?
No, I think clearly we would look at a target price. I think we had given a target price of around 550 odd. So we stand by that, and I think what is interesting is I believe that in the year going forward, that is FY19, we could possibly see another 75 to 100 odd crores interest cost savings, because I think the company has further reduced debt, and I think on record they've gone and said that the working capital debt is about 300 crores and the intention of the company is to even make this completely debt free. So I think the company is managing its finances quite well, and hopefully the benefits of interest cost reduction would obviously percolate down to the PBT level. So I would believe that a lot of earnings growth, Navneet, would possibly be boosted by the interest cost reduction, and I think they operated at 93% capacity for the TDI plant. They are looking at a targeted level of 110 odd %. So I think clearly volume numbers also should be decent, and along with that, if the interest cost reduction comes in, we could at least see a 20 to 23% kind of EPS growth even for FY19.
Okay, so 22 to 23% EPS growth is what Avinash is suggesting even for FY19, which suggests that if you bought the stock, you can probably look to hold on. Just want to mark few stocks, pull up the intraday chart of Page Industries. That too has gone up, not a very liquid counter, but yet that's been gaining traction in the past few sessions. So Page Industries has seen gains of over 2%. Max Financial, the stock which we highlighted at the start of the show, is up for the 6th straight session. Good going for this one, actually. Let's get a chart check going on Max Financial. Ruchit, at current levels 522, it's been inching higher in the last 5 to 6 sessions. What should be the target price if somebody had bought the stock?
So although in the last 4-5 months we have seen a huge underperformance in Max Financial Services, but if you see the recent chart, then around 420 the stock twice took support and reverted higher from those levels. Now the good thing is that last 3-4 trading sessions in this up move, the volumes are quite good. So I think this is the main reason why this stock has been showing strength in this last couple of 2-3 trading sessions. Now if I see the positional charts, then the 200 DMA for the stock is coming around 550 to 555 range. So I think this pullback move should get extended up to its 200-day moving average, which is placed around 550 to 555. So any existing long positions could still be held on. A trading stop loss would be the best method to trail this, to ride this trend. As of now, 487 is a good support, so 485 could be the stop loss on existing long positions for a probable target around 550 to 555.
Okay. It's 3:10, so that time of the show wherein we first get you what stocks could get in or out of the F&O ban. And let's get in Navneet Saluja's list out. Navneet, how's the list looking today?
Neeraj, since it is the expiry week, I think more stocks are likely to come out of the F&O ban. So do watch out for something like Jet Airways, TV18 broadcast also. Both of them are very, very close to coming out of the F&O ban. If you look at the total open interest as a percentage of market-wide position limit as of yesterday, was very close to the 80% mark. There you go for Jet Airways, it was 81. For TV18 broadcast, just 80.05. For a stock to come out of the F&O ban, the level has to fall below that 80%. So watch out for these two counters. Jet Airways actually trades with gains of 2%. TV18 has been trading weak on back of the quarterly numbers which they released today. But still, one stock watch out for is Wockhardt. We've been highlighting that counter. It's gone up on good volumes, though its off day is high, but a lot of interest has been seen. If you look at the total open interest, it's very close to the 93% mark. For a stock to enter into the F&O ban, it has to breach the 95% mark. So let's see if Wockhardt enters into the ban for tomorrow or not. But just a caveat, it is the expiry week, so the trends actually change really fast in the last 10 to 15 minutes. So watch out for all these three stocks.
Do watch out for each of these. There is, not because it's Wockhardt and therefore it's a pharma stock, but I'm just saying the last few days there is some bit of a return of flavor of pharma meaningfully from a trade perspective at least. Sacchitanand, any pharma stock that fits the bill for a trade?
Well, we have been recommending some of these stocks of late, but from a trend perspective, the way the stocks are reversing, I think Cadila Healthcare still has some legs which are left. So the stock is quoting somewhere around 405. Recently, we saw this particular stock, reviving from its downtrend. A breakout from the downward sloping wedge was established somewhere close to 380, and the pattern is suggesting a target somewhere close to around 435. So yes, from a position perspective, still this particular stock looks decently placed. The reward to risk even right now is very suitable. 390 should be the stop loss for the trade, and an expectation of a move towards 430, 435.
Interesting. Okay, so that's pharma. Avinash, the other set of stocks, I think Navneet was trying to ask the previous guest, Delta Corp. What did you make of the numbers?
I think numbers sound to be very solid, and I think I heard the management commentary. I think clearly once the new license gets going, I think incrementally the casino business is going to generate definitely more healthy cash flows. I would believe that the opportunity is huge. I think clearly from a business standpoint of view, possibly a scale up of at least 2 to 3 times the business size over the next couple of years could happen. So I think this is a stock, Neeraj, one should obviously look at it as a portfolio pick. Any correction should definitely be used to buy it. Our sense is that even from the current odd levels, upside of 25 to 30% could be possible, provided one is taking a slightly longer term view.
Interesting. Okay, that's the view on Delta Corp. In fact, it's time for what dealing rooms are recommending in the session today. Yatin is here with us. Yatin, just a brief segue into the Delta Corp interaction as well. And what do you think stood out in the interaction with Delta Corp today?
Well, the management is quite confident that the online, strategy game business is doing well. Apart from that, they said that the Goa casino license fee hike, which has been done by the state government, that will probably not be as bad as the market probably expects, because we'll have the smaller players which will be shutting shop or probably consolidating, and there will be probably incremental footfalls on the back of increasing license fee for Delta Corp as other smaller players consolidate themselves. So the management is quite confident that the growth which is there as far as the core casino gaming business is concerned, that will be playing out well. And they also spoke about 2 important points. One is regarding the Sikkim operations and one is regarding the Daman operation. Both of these operations are pure, more to do with hotels business, and that industry is also doing well, and probably the company not burning cash on an overall basis. And of course, now they are sitting on net cash. Probably the debt costs also have come down substantially. It's now almost zero. So that is something which the Delta Corp management spoke with us. You can of course look at the interview on our Twitter handle at BloombergQuint, and also visit our website bloombergquint.com for more details.
Okay, what about dealing rooms? What are they recommending?
Neeraj, one standout result for today was ICICI Pru. And if you look at the overall margin picture, that has been quite strong, and probably market has liked that performance. Of course, there was a one-off kind of a loss which is there, but on an overall basis, this is one stock. If you look at the last 5 minutes, I think it has given a very big spike, 10% up for that one. So ICICI Pru, the dealing rooms are bullish. See that spike actually, just coming in right now. This is one dealer room pick which is coming in. Yes Bank is another one. Of course, the dealers are of the view that above 320 rupees this stock could do well. They're expecting a short-term 5 to 10% upside here, and also we have domestic funds which are turned buyer as far as this stock is concerned. And do watch out for TD Power. Of course, earlier in the day we had the management also speaking to Bloomberg Quint. NHNI is also said to be lapping up shares as far as this small cap capital goods player is concerned.
Well, interesting, and we spoke to the management earlier today as well. Thanks a lot for putting that into perspective, Yatin. Avinash, ICICI Pru.
Just want to add, I think both ICICI Pru and SBI started inching up together. Even SBI Life had touched its fresh highs in today's session.
No, I think Neeraj, numbers have definitely been quite solid, and I think if you look at the discount versus HDFC Life, I think probably the markets would not give a bigger discount to ICICI Pru now, and probably that's the reason there's some sort of re-rating expected. But I think even SBI Life, if you see the kind of new premium growth number, I think even in the previous quarter, the management was pretty confident. They had a run rate of almost 35 to 38%. And I think if these new premium growth numbers are maintained, then I think probably even SBI Life deserves to be re-rated. I think within the insurance space, HDFC Life, ICICI Pru and SBI Life, I think all these three are definitely worthwhile if one were to take the next, say, 18 to 24 months.
The interesting bit is everybody talks about how the performance of HDFC Life will be consistently much better, and they have demonstrated that in the past. But and no doubt that has been the case. I mean, their numbers were fabulous. The VNB margins, VNB margins for HDFC Life were strong, but the 61-month persistency ratio for ICICI proved much better than HDFC Life as well, and that just shows the stickiness that a customer has with a particular brand for the last few years. That is not to say that that's the reason why the stock is doing well, but certainly the stocks are doing rather well for themselves. Ruchit, all three life insurance names, but predominantly ICICI and SBI Life revving up in trade. Can somebody trade these names? A BTST, is that possible?
I think in ICICI already we have seen that the stock is up by 10%. So from a BTST perspective, won't get that favorable risk-reward ratio or say a good stop loss to go long on. SBI Life definitely this also has been in one of the outperformer in the recent past. The high top high bottom structure is still getting continued. So rather I think if one has to do long from a short term perspective, I won't recommend for a BTST, but from a short term 725 should now act as a very strong support. So one can go long from a short term perspective with stop loss below 725. As per the reciprocal retracements, the target projections are coming around 775 to 780 in near term.
Okay, what about closing strategies? It's 320, so let's try and do that. Ruchit, I'll come back to you first only. What would be your top closing strategy for the day?
Neeraj, one would be Yes Bank, which I have already recommended, but I think apart from that, if one has to take any other fresh trade, then Reliance Industries, one can go along from BTST perspective. Definitely one of the heavyweight which has been an outperformer today, and the way volumes have panned out, even tomorrow's trading session, I think this outperformance could continue. So keeping stop loss below 955, create long positions in Reliance Industries and expect target around 990 to 1000 maybe in tomorrow's session itself.
Okay, that's a buy coming in on Reliance Industries. Sacchitanand, what about you? Any strategy, BTST, STBT?
Well, we have two stocks which are buzzing. One is M&M, which has been a very strong outperformer. Even right now, the way the open interest is building here, I think 865 is something that can be seen very soon. A stop loss can be placed somewhere close to 835 and long positions can be initiated here. The second stock that I'm liking is Muthoot Finance, which has been a consistent one. The high top high bottom structure has been maintained very well. The stock is quoting somewhere close to 446. We are seeing that a broadening pattern on the daily scale is getting matured, and we may see the effect of the same in next couple of trading sessions. We are expecting a price target somewhere close to 465. A stop loss can be placed from here on at around 438. Long positions can be initiated even in Muthoot Finance.
Okay, interesting. Some spikes there coming in for that stock as well. A bit, certainly a move up in the last few minutes of trade. What else? I think Emphasis in the last few minutes has shown a big spike up. Pull up Emphasis, and yeah, look at that shooting up. Coffee Day, 338. Wow, after, if this stays above at these levels, then it will be after a meaningful period of time that it is consistently trading above its issue price, which I think was 320 or 325 or thereabouts. But Coffee Day shooting up in trade. And today EIH has just had a bit of a move. It's now come back into the green, but it was in the red. But a bit of a spike that is just happening in the last few minutes of trade. Avinash, Coffee Day, any thoughts?
I think after a long time, Neeraj, you are seeing the stock moving up, and hopefully, on the operational side, things have started looking up. Coffee prices have, obviously moving up, and the kind of geographical reach they have has actually benefited the company, in fact, in both of top line as well as margin expansion. I think I would be very interested to know, what is the kind of debt on the balance sheet. That was the main pain point for a long time, and I think even when the IPO came in, they raised a lot of money to, reduce the debt. So I think once the debt on the balance sheet gets reduced, I think you could see a lot of earnings re-rating here, because there is a strong pedigree for the brand, and I think it's a well-known product. So scaling up this business is not going to be a problem.
Interesting. You like a stock called Ashapura Intimate Fashions. Interesting. One thing that we know, both me and Navneet, we spoke to the management. They've been buying from the open market, but
and
obviously that's not
more.
Yeah, they want to buy more.
Yeah.
But that's not the reason why you are liking it, right?
No, in fact, Neeraj, the interesting thing about this company is that it was an SME player some years back. It got shifted to the frontline exchange, and the progression from an SME to a frontline company has been quite commendable. In fact, they are specifically in the mid-market category, and where they obviously offer little value for an aspirational buyer, and especially in the segment in which they operate, loungewear, that is one segment where there is less competition as compared to housery or the innerwear segment. And frankly, that is one reason this company is growing by about 35 to 40% in terms of top line, and the management is pretty confident that over the next 3 years, they are now having a run rate of around 300 crores. They are looking at a top line of almost 700 crores by 2021. So obviously,
2021.
Yeah, 2021, and with EBITDA margins of around 17-18% and net margins of around 10 to 11%. So clearly, the business model is well established. Valentine is a well-known brand. Now they want to get into the menswear segment. They have launched a brand called Truckee, and this has started gaining traction slowly. In fact, last year was the launch. So obviously, that is one segment where they have not targeted, and that is now going to grow much more strongly. Most importantly, they have sold treasury shares of their group company, which has actually got reflected in their profit and loss for the first 9 months. And they plan to repay a lot of debt out of this money. They have raised about 38 crores from the sale of treasury shares of their associate company. And going forward, the long-term debt, which was about 100 odd crores, would be roughly about 35 crores by FY20. In fact, they've already finalized the sale of their property in the other, office, which would actually raise about 30 odd crores, and the deal is likely to be done sometime in September 2018. So this money is going to be reflected in FY19. So clearly, interest cost reduction, a solid top line growth, a margin of almost 17-18%. We could see a profit of almost 60 to 65 crores for FY20. So from a profit of roughly 28 crores this year, Neeraj, earnings growth expansion is going to be solid. These are purely operational numbers. I'm not taking the extraordinary other income factor.
How much profit CAGR do you envisage?
At least about 60 to 70 odd % over the next, say, 3 years.
Really? 70% CAGR returns?
It should manage, because clearly even today they are operating on a very small base. Last year was 300 crores. This year would be about 390 to 395 crores top line. And the best part is, in this business, they have a market share of close to 65 to 70%. So not many competitors are getting close into that loungewear segment, which is actually growing quite healthily. So, with the earnings of 25 odd rupees, my sense is this could easily get a multiple of about 24-25 times. If you see the PE band of this stock, Neeraj, ever since it got listed on the frontline exchange, it used to trade at ridiculous valuations of almost 40 to 45 times. So this is a company which has got a very strong top line visibility, a good EBITDA margin, and with the debt on the balance sheet, coming off 100 to about 30 odd crores, interest cost will be hardly 3-4 crores by FY20, which is about 14-15 crores for this year.
How he mentioned, Neeraj, wish the company was not listed and how he wanted to own the entire business. So actually the management also sounded pretty bullish.
In fact, one interesting part is he clearly mentioned to us that, he wants to reduce capital employed in his business to the least. So he wants to only focus on brand. So probably in future, there could be some more hive-offs on the manufacturing units which he still has. So that could further accelerate the return ratios.
Okay. That's an interesting one though, must say. Let's see if Shapura Intimate Fashion tends to react more or no. Avinash Gorakshakar clearly likes this one. Just want to pull up the stock price of India Glycols once. I don't know if it's indeed a late surge out there or no, but it's up about 10% and trading at new highs. Yes, it's been a phenomenal move today for India Glycols on 3 million shares. So it's a good volume picture as well out here. Ruchita, chart check, India Glycols.
Definitely a positive chart, as you told that the move has also been supported by very high volumes. The previous resistances have been crossed. So I think this momentum should continue on the high side. For short term, 640 would be the first target area, which is 127% retracement of the previous correction. And above that, we could even see levels around 700, 705. So one should continue to ride on the trend. Even at current levels, if one is looking to buy fresh, then one can go long, keeping stop loss below 560.
Okay, that's a buy coming in on India Glycols. The counter has gone up on account of heavy volumes in today's trading session. Well, just few minutes to go for markets to close. Let's head across to Neeraj Shah to find out how today's closing is exactly panning out. Neeraj, we're closing above the 10,600 mark. I think that's my positive takeaway from today's session.
Well, that makes two of us, to be honest, Navneet. And save for the Nifty Bank didn't do well, but lack of losers leading the Sensex to do what it is doing. The mid caps and the small caps, well, the advanced decline ratio not too heartening, and this is the reason why, because the small cap index was down about 0.5%, the mid cap index just ending flat. So the broader end of the market didn't do that as well, just that the large caps and selective banking names and Reliance Industries, remember, helped the indices. Now, these are the top movers on the Nifty. Reliance right up there, 3.5%. Yes Bank ahead of the numbers, up about 3.5%. Strength in Bajaj Finserv. Stocks like ICICI Bank about 1.5%, L&T about 1.5%, and HDFC the heavyweight. So now you know who the contributors would be: Reliance, ICICI, HDFC, L&T. Arguably these would be the top contributors on the index today. The losing end, IT right out here, Wipro, Techem, Infosys, HCL Tech right here, and Hindalco, Vedanta. So commodities and technology are the two pockets that really got a drubbing in the session today. But you would still say it's not a bad close. The world wasn't particularly a gung-ho place. We ending about 0.25% to 0.5% higher, which is not bad news. Now, the broader markets didn't do as well, but lots of movers and shakers.
That's right, Neeraj. The broader markets definitely underperformed in today's session, but there were a lot of stocks that were in focus. And let me start off with the logistics pack. Gati was doing pretty well on back of the news. They have a board meeting on April 26th where they're looking to induct a strategic partner, and that stock was locked in upper circuit with gains of 20%. There was a wrap-up effect seen for other logistics stocks as well. So something like Snowman Logistics, that rose as much as 15% in today's trading session. Astra Micro from the broader market was the other counter, which did pretty well for itself. That also closed the day with good amount of gains. Indiabulls Ventures, on back of good set of earnings, reacted positively. Street gave a thumbs up. As you can see, it had a gap up opening coming about as the numbers came in, and it sustained those gains throughout the session. The other one which came out with good set of numbers was GNFC. Extremely good set of numbers. The finance cost has been going down for the company. That's one of the major triggers that the street has been talking about. So GNFC is the other one. Well, on back of earnings, ICICI Prudential came out with the numbers just in last 1 hour of trade, and it had a good move on the upside, though the profitability was definitely lower for the fourth quarter, but the premium income was higher if you compare it on year-on-year basis. And the rub-off effect was also seen for SBI Life. At the same time, you saw SBI Life also inching higher. That also touched its lifetime highs in today's trading session. India Glycols, which we just highlighted some time back, that touched fresh 52-week high in today's trade. On the losing side, the Anil Ambani Group companies once again came under selling pressure. Reliance Naval came out with bad set of numbers post-market hours yesterday, so that was trading lower. Also something like Reliance Communication that came out of the F&O ban, and clearly that after coming out of the F&O ban, traders were taking fresh short positions on this one. Nalco, in fact, the entire pack of aluminum makers, they were under pressure, reason being the aluminum prices globally have been inching lower. And something like NIT Tech, remember the IT pack has been moving higher in the last few sessions. Today was the day where there was some bit of profit booking seen for this counter, especially if you look at the entire pack. NIT Tech was trading lower with almost 4 to 4.5%.
Well, as the markets close, about 0.5% for the Sensex and the Nifty Bank, about 1/3 of a percent. We ended reasonably okay, not at the highest point, still doing reasonably okay for ourselves. The contributors list, and then the market breadth, and then the volumes. In that order, the contributors, I would guess Reliance would be topping. Yes, and yeah, HDFC, ICICI, L&T. But interestingly, technology and commodities, both the packs are playing spoil sport today. Couldn't quite figure out technology, a reason thereof, maybe profit booking. Yeah. But commodities, there has,
and both are aluminum makers, so probably that was the reason. But I guess had it not been for Reliance move today, we would have ended just about flat. That contributed almost 30 points to the gains that we saw. Nifty was almost up 30 points for the day.
Yeah, the big boy was almost saying, feeling left behind to TCS. So big move there in Reliance Industries for sure. The market breadth and the number of advances far higher than the number of declines far higher than the number of advances, at courtesy the broader market performance. But the volumes would be interesting, and let's see if we repeating yesterday's moves. Almost, right?
It's just the same, I guess. For the F&O, definitely it's just the same, and a little bit higher for NSE cash yesterday, 31,000. So today it's about 31,800 crore. But let's see. I think the volume, at least for the F&O side, next 2 days could be on the higher side, 8-9 lakh crore or something.
Yeah, well, the typical expiry week behavior. So that's essentially the sum and substance of what we've done today. Final thoughts from our experts first. Sacchitanand, how does this close set us up for the next 2 days, closer to expiry?
Well, as I said, the market has been respecting the 5-day exponential moving average. It has been maintaining its closing above it, and so far, it has maintained that particular series. So I think, one should not read much into it. 10,700 would be a significant level. As I said, it is the retracement of the previous decline. It's 61.8%, which is resting somewhere close to 10,705. So I think overall, so far, the markets are maintaining this particular sequence of series of closing above its 5-day exponential moving average. I think the trend is healthy. The only disappointment would be in case 10,500 is breached on a closing basis. So far, I think that has not been witnessed, and we expect that the market should have a good expiry somewhere close to 10,700.
Okay, 10,700 is likely the level which Sacchitanand is suggesting where the expiry could take place. Richard, second straight day when we've retreated from that resistance mark on Nifty of 10,630, but still closing above the 10,600 mark was a positive sign. What would you do tomorrow? Let's say if we have a flat opening, would you create any fresh positions on the index?
Yeah, so normally it's not only last couple of trading sessions. If I just see a bit historical charts, and even during the month of February, this 10,648 acted as very strong resistance. Twice the index attempted to cross this level, but it was not able to cross that. So 10,640 now becomes a very crucial resistance for next 2 trading sessions. If from an intraday perspective or just from 1 or 2 days perspective, if one has to create fresh positions in the index now, it has to be only after crossover of 10,640, and that too on the higher side for target of 10,700 to 710. So these would be the levels which short-term traders who are trading from 1 or 2 days perspective needs to watch out for. And as we discussed earlier, that 10,500 now has become a very strong support base. So all the stop losses on all the existing long positions should be strictly kept below 10,500.
That should be your stop loss there. Richard, Sacchitanand, appreciate both of you joining us today and taking us through your views on the markets, about the technical views. But let's get some closing thoughts going from Avinash. Avinash, actually, we've got a query which is coming on our YouTube platform. We've got few watchers there, and one of them is Sandeep Pawar, who wants to view on Nalco, and we know the entire pack, which was how it was moving higher, came under pressure because of the prices crashing. What's the view on Nalco going ahead?
No, I think clearly, this is one company which has got very little debt on the balance sheet, and I think in the near term there could be volatility because aluminum prices have fallen off. But if the investor could possibly look at a slightly longer time horizon of say next 6 to 12 months, I would believe that at some point of time aluminum prices would settle down, and operationally companies within the aluminum space, both Nalco and Hindalco, have been doing pretty well. So volume expansion and price improvement are factors which would obviously take some time. But nevertheless, I think rather than a losing trade, giving it some more time, you could possibly make a decent risk reward maybe in the next 6 to 12 months.
So hold on if somebody has Nalco?
Yeah, I think I wouldn't suggest to sell off in a hurry.
Okay, thanks a lot, Avinash, for joining us today and taking us through your views on the markets. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. But don't go anywhere. Coming up next is where we wrap the day's trading session on Bloomberg Quint's Market Wrap. Stay tuned.